How to use the candlestick engulfing strategy. Today, we'll explain how to use the candlestick engulfing strategy for quick trades starting at 5 seconds. This strategy is based on a candlestick pattern that signals a potential trend reversal. The pattern occurs when a new candlestick has a larger body than the previous one and moves in the opposite direction. This new candlestick is called engulfing candlestick, indicating that the trend may be about to change. The larger the engulfing candlestick, the stronger the potential movement. How to use the candlestick engulfing strategy. First, identify a candlestick that is larger than the previous one and moves in the opposite direction. Wait for the formation of a new candlestick to confirm the signal. If the candlestick is moving upward and engulfs the previous one, it's a bullish signal. Open a buy trade after the closing of the confirming candlestick. If the candlestick is moving downward and engulfs the previous one, it's a bearish signal. Open a sell trade after the next candlestick confirms the move. Use the candlestick engulfing strategy along with RSI, MACD, or moving average indicators. You can learn more about using RSI, MACD, and moving average indicators in these videos. Try now. Follow the link in the description.